We are witnessing a historic market melt-up where asset prices are exploding, yet your dollar is losing its power. This could be the biggest wealth transfer in decades, and if you're not prepared, you'll be left behind. Here's how to survive it. Welcome back to the Dollar Pilot, where we break down the most complex financial news and global economic trends into practical money strategies that actually work for you here in the United States. Today, we are diving deep into the current state of the global economy, the stock market's record-breaking rally, and a significant leadership change at the Federal Reserve that could change your financial future forever. What we are seeing right now is truly unprecedented. The stock market is experiencing one of its strongest rallies in history, returning to brand new all-time highs at a speed that has left even the most experienced investors in disbelief. But this isn't just about stocks. Home sales are seeing unexpected movement, and crypto market trends show Bitcoin has recently seen a 13% jump, suggesting that we are in the middle of a market melt-up where prices balloon to levels we never thought imaginable, before eventually hitting a massive wall. One of the biggest factors controlling your daily life and the entire market right now is inflation risk, specifically driven by the quiet king of the global supply chain, oil. Many people don't realize that crude oil prices don't just power your vehicle. It is the fundamental engine behind cargo ships, planes, factories, fertilizers, and packaging. It is the fundamental engine behind cargo ships, planes, factories, fertilizers, and packaging. When oil prices rise, as we've seen them jump from 50 cents out to over $100 recently, it acts as a hidden tax on everything you buy. Research shows that every $10 increase per barrel raises inflation rates by roughly 0.2% and slows economic growth. This is exactly why the Federal Reserve has hit the pause button on interest rate cuts, leaving many investors waiting until 2027 for any relief. Interestingly, while Wall Street is celebrating record highs, consumer sentiment is at an all-time low. This disconnect happens because the stock market is forward-looking, betting on corporate earnings a year from now, while Main Street is feeling the pain of today's grocery and gas prices. Historically, when people feel the most pain and sentiment is at rock bottom, it has often been a strategic time for long-term investing, but the market volatility we are seeing is legendary. We saw a 10% rally in just 10 days, a move that went from oversold to overbought at a record pace. This proves that trying to time the market is a losing game. Those who sold at the bottom missed the entire recovery. Moving on to the world of digital assets, Bitcoin continues to surprise everyone. Despite being down from its absolute peak, institutional money is pouring back into Bitcoin ETFs, and major financial giants like Goldman Sachs and Schwab are launching their own crypto projects. As the U.S. national debt continues to climb toward $40 trillion, more people are looking at Bitcoin as a hedge against inflation and a weakening dollar. Then there is the U.S. housing market, a source of confusion for many. While national prices have risen slightly, we are seeing a massive split across the country. Zillow Forecast has downgraded its outlook, predicting 0% appreciation over the next year. While the West Coast and Sunbelt regions like Florida and Texas are seeing prices soften or even drop, the Northeast remains competitive due to real estate affordability. The real issue here is mortgage rates, which are tied directly to inflation and oil prices. Even if rates drop to 5.7% by 2030, it won't magically make houses affordable for everyone overnight. This brings us to a major turning point, the transition of leadership at the Federal Reserve. With Jerome Powell's term nearing its end, the spotlight is on potential successors like Kevin Warsh. A new Fed chair often brings market uncertainty, and history shows that the stock market can see significant declines during these transitions as the market adjusts to new monetary policies. Warsh has expressed a desire to shrink the Fed's balance sheet, which means less money printing, a move that could humble a market that has become addicted to easy liquidity. At the Dollar Pilot, we believe the only strategy that consistently wins is long-term investing and maintaining a disciplined asset allocation that you can live with even during a 30% to 50% drawdown. No matter who is in charge of the Fed or what the next tweet from a politician says, financial consistency is your greatest weapon. Since 2017, those who stayed the course through every bubble, gestas, infan, borstas, iash, and market crash warning have seen incredible gains. We might face a black swan event or a temporary drop, but history proves that those who keep buying through the uncertainty are the ones who come out ahead. Your financial protection isn't just about where you put your money, it's also about your digital security. In times of economic shifts, more people are moving money and accessing accounts on unsecured networks, making tools like a high-quality VPN essential to protect your data from hackers. Ultimately, the goal is to stay informed, stay diversified, and never let short-term fear dictate your long-term wealth. The world is changing rapidly, and at The Dollar Pilot, we are committed to helping you stay one step ahead of the market cycle. Whether it's the rise of digital currencies, the shift in global trade routes like the Strait of Hormuz, or the massive US national debt cycles, knowledge is your best defense. Don't let the noise of the melt-up distract you from the financial fundamentals. Stay focused, keep learning, and remember that real wealth building is built through patience. Nerforin fine gor fori I enerfire daser or foriash, and a solid investment strategy. We are here to navigate these unbelievable market conditions together, ensuring that you don't just survive this economic shift, but thrive through it. Thank you for being part of this journey with us. And for Brianti Inar Asahar, and as always, keep your eyes on the data, not the drama.